Okay, hello and welcome again. I will do a little rant about the market as usual, and then I have some exercise for one of you who is willing to work with me. It's a market structure exercise, usually very powerful. And I see more and more that people neglect the market structure stuff quite a lot. Everybody's looking for levels, 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 but market structure and context is so important. And so we're gonna do a market structure exercise that is usually very helpful for my mentees. All right, let's start with the little rant. Yeah, not much happened basically since Saturday. We are still at like the range lows on BTC. Sentiment is kind of still very bullish, like at least the news sentiment. I bet most people are not as happy as news make it seem, but crypto related news are pretty much since like the whole year are so bullish. But I'm not surprised because if you look ever since late 24, news are highly bullish around crypto. And if this is the top range, as said, whales want to offload within this area. They don't really care if they offload here, 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 or here. So bullish sentiment, crypto draining as much money as they can, pulling in as much money as they can, makes perfect sense all throughout this range here. So yeah, so much to that. I'm not long BTC. Still have the ETH long, still have those altcoin longs. I TP'd the ETH long 30% simply because I see it as a counter trend trade. I have like 3 trades open. Overall, it was like 3% risk. Those are not like out of the rough here, so it doesn't really make sense to me to TP from RR perspective, and also moving the stop loss, yeah, simply makes no sense at all. But here it made sense. I removed some risk. I pulled out some money. I see all of those 3 trades as the same trade. I see it as risky scalp counter trend trade, more or less. And that's why I pulled the risk. And other than that, I think the SPX is shaping up what it usually always does around major tops. So if this is a major top, right? So I'm not saying it is one for certain, but if you look like before those big sell-offs, usually we have some kind of aggressive breakdown. We break the structure, we grind around a little bit, then we go up again. We like take the high, and then on low volatility take the high, and then it just goes down and it never looks back. And let's imagine something similar happens here. We maybe do this, and then do this, and then we break down, never looking back. I wouldn't be surprised to see something like that. So I thought maybe this is already like our last liquidity grab, and then we go down. Didn't happen so far, but we have the aggressive sell-off, we have the breakdown. So I think something like this makes perfect sense. And looking at prior tops, as said, we looked at the one that in 20 or earlier this year. When was it? Was it 25 already? Yeah, February, right? So here, same story, aggressive breakdown, coming back, taking the high, sell off, never looking back, never taking this high again. And it's either like complete total devastation or it looks similar to that. And right now it doesn't look like total devastation. So maybe something like this is on the table, and we have already closed above the 0.5 of the swing here, or of this range. So range highs are likely. So I wouldn't be surprised to see something like this. As said, some low volatility ranging here, and then down we go. Invalidation, obviously, if we go higher from there. So gonna take a short, probably looking like this, depending on where those levels or where the structure is forming, and trying to get into something like that. So, and obviously like all risk assets are pretty much like based around the SPX a little bit. And so will the Nvidia short, which is like in very good profits. Very good profits. Seems to break this down. I'm almost a little bit tempted to take profits. It's not loading. Let me quickly change my internet. What is this? Here we go. Okay, it's still not loading. Servus Andy, by the way. Nice that you made it. Hello, Bingo. So why is it not loading? Here we go. Um, Similar story. So I'm almost a bit tempted now that we are back at this range to take a profit here, but I mean, it's a swing trade, right? So probably patience is still the right thing to have. Mm, but I'm tempted, definitely tempted here to take a profit. But I want to see how the next days develop. And also on Google, I got stopped on my short idea, and it's just ripping. I mean, it's really just ripping higher. Who have thought that? And I'm still looking to get into a short, but I mean, I'm not willing to stop in front of such a momentum. So I let the momentum like cool down a little bit, and then there's still an opportunity to go short. And other than that, I mean, I added to wheat for those who care, and I'm looking to take two short because here's this big gap on the daily, and it's in the premium of the swing, and gaps usually kind of work very well on stocks. So what I would want to see here would be some kind of momentum break or another or a different execution trigger. So big like what's the word, absorption wick would be also nice as a trigger. For now, it still has momentum to the upside, so I'm gonna be a little more patient. But maybe this could turn out to be something nice here. Um, yeah, will develop over the next days. I mean, the holidays will probably make it a little more difficult, a little more weird with a close day. Then we have a half day. We will see, but I think something interesting could develop over those days, simply because lots of people are going to have time to watch their screens, watch their positions, and also, I mean, the whole holiday thing, the whole Christmas thing. I mean, I like Christmas, don't get me wrong, but it's such a invention of capitalism. It's kind of crazy, like the whole buying and present kind of stuff, and I think once people are in this kind of mood, and I can feel this myself a little bit. So if I'm in this mood of buying some things, usually once you started to spend money, it flows a little easier. And around those days, people buy presents, people buy this, people buy that. There's a lot of like discounts everywhere. And so people are in this kind of mood of spending money. And why not in the market then? So yeah, gonna see how the next days develop. As said, so much to my positioning. So, next step on the agenda would be the market structure exercise, because as said, I think market structure is, to be honest, like one of the biggest keys to success in this game. And so few people have like a good understanding of market structure, and so many people are simply looking for level here, level there, just taking trades on those levels. But like real market structure makes you step aside before such moves. So the first sign of this is going to break down was already occurring here. The confirmation was here. Don't wait for this low, for example. And these things are so important that I want to like focus the session a little more on that. And obviously different markets have different kind of structures. So if you look at the SPX, you need to read it differently than, for example, crypto, simply because it's like a different asset, different players, different algorithms running this asset. But in the end, once you understand market structure, you can apply it to pretty much every single market. And what I've seen, like I talk a lot about market structure in the streams on stuff, but what I've seen, people understand better if they learn like um with examples, and not just examples that I give them, but also making like the thing themselves. And for example, I look over the shoulder and people really doing it themselves. And I would start this exercise with, for example, BTC, and I show how I read market structure and how I like go with a blank chart. And then one of you can come up on the stage and simply doing the same thing and telling all the whole group like the thoughts and why this low, why this high, and simply like how they see market structure. And then we talk and reflect about the whole thing. And I start with BTC because now everybody has seen already anyway what I look at BTC. And so let's take a blank chart. And I also, it's not the whole chart, obviously. Give me more history. Maybe this one. What the fuck? What is this? BTC2, 6. Okay, okay. Give me a second. Let's take this Binance chart. Yeah, this is looking good. Okay. Interesting how the volume spiked down at the lows. But this is not what we talk about. We look at this chart. So it's on the monthly now, and I don't really, in this case, it's not about like going down through every little time frame and look for like the best refined level or whatever. In the end, this is simply about market structure. We can mark a little bit of supply and demand. Hello, Victoria. And from here, then it's, as I said, it's mainly about structure, key highs, key lows, when it's an uptrend, when it's a downtrend, all of those things. And for that, we can simply look at the monthly. And we have, first of all, a few prominent like details already. So let's make it with this. We have a key low here. It's a monthly key low. What what this makes a key low is the fact that so it's a strong key low simply because it's formed, and after we make a higher high, close above, and once we come back, this is our important low. Why? Because it formed new structure. So after here, after this level, we made a high high, and so this is now a key low. Same story here, key low, higher high makes this a low. Before this, for example, before this move happened, this was our key high, right? We took it, so this is not important anymore. Same story here. We took it, we closed above. This is not important anymore. We are now caring about this high. And with high, I also mainly mean areas. It's not about the perfect price on the dot, on the cent. Like you wanna think about this as an area, right? We talk about like the high area, and we don't want to be perfect. We don't need to know that it's 126,573. It's within this area. This is our big supply area, our key high area. We count wicks or body candles. Um, Yes and yes. In this case, we look at the real high. In this case, it's just about the swing high, the key high, which is then a wick, obviously, most of the time. It's usually never like just a body. And we wanna confirm this as that this is our key low. It formed here, and it's confirmed with the body close above. So if we only wick above, we can still consider this as a key high, for example. And with the body above, we confirm the break of structure, and this is then our new key high. And this, technically speaking, on this chart, as long as this high here is holding, like as long as this low, sorry, this low here is holding, this is technically still an uptrend. But obviously, if you bought BTC, you don't, or if you're long BTC, you don't want to wait for an invalidation below this, because this means from the high you're already like 40% lower. And there's a reason why market makers place structures that way, because most people, you learn you should look at higher time frame, but the higher time frame low, unfortunately, the monthly low is unfortunately here, and you need early signs. You can't count on those big invalidation levels, which technically are. So once we close below this, the bull market, the trend has shifted more or less. The bull market is over, you could say. But in reality, you could have get early signs already, and you don't want to wait for this, because once this happens, many people are going to get bearish, and they're going to sell, and we usually get some kind of bounce. This is what makes this a key level, not just because structural wise this is a key low, but also because it creates liquidity once price approaches this area. And so these are our key lows, and obviously also this one. And they're all confirmed with the next high. We make a high, we make a low, we take the high, so it's a key low. And on this chart, these are our key lows. So if we then go down for example, for the weekly, it gets a little more nuanced, right? So we have now all of those lows, But now we can look within, like what happened within the structure. And within the structure, we have formed this low here, right? Here's not a lot of structure, it's just going up. This is pretty much like air, and you can see this on the move down. This was air, on the way down it was air. There was not really something happening on the chart, so they just pushed price through. The only reaction that came here, like the wick and also those wicks, were around the 100K level, which also was this key low. And as said, we talk about an area, right? We don't talk about the perfect low. But around this low, liquidity has formed. And so we pull the line here, and we touch the area, this, or also this order block. We touched it once here, and then we touched it again here, and then we just smashed through. And with the touch of the 100K level here, we front run it. Here we broke 100K. This created liquidity. And also, once this really got broken and confirmed with this candle here, this structure was broken. And this is what we can use on the weekly in this case to get the early sign of a change of trend. But also, you could also call it change of character in this case, because this is our external structure, right? So we have external structure here with the monthly lows, but this is internal structure. And we use internal structure to get early signs, to be ahead of everybody else. And in this case, we got our confirmation here. We broke it down. And now the next important low that we look at is this one. But with this one broken, I wouldn't be higher time frame bullish anymore until proven otherwise. Unfortunately, to prove otherwise, we need to take this high, right? And so you don't want to get bullish here. Next trap. So we can use, for example, a fib, because the 0.5 fib, and I've said this in a post lately as well, the 0.5 fib is our equilibrium, and should price break this equilibrium, I mean, here's still supply, right? So it's still not, it still doesn't mean we go to 150K, but this is the first big area of resistance, and as long as this is not broken, we cannot entertain range highs. And once range highs are broken, we can entertain higher targets. But this is our internal structure, and it's breaking to the downside. So being too bullish here doesn't make any sense. Not at all. So these are our key lows. We have now on the weekly, we have another key low here. It was not visible on the monthly. On the monthly, there's pretty much not a lot of structure here. So probably once we approach this area, we fall a bit like off a cliff. Like this could be the last big legs down on in the bear market, simply because there's not much that's going to hold price. We can expect maybe a slight reaction here, but it doesn't look like the best perfect area for anything. Okay, back to market structure. So on the weekly, we see we have some kind of consolidation, which is then also, it's a demand area, and we can mark this as a key low. But this is obviously our external low. We have here an internal one, and this is the next external one. So now on the weekly, as said, market structure is breaking down. And now we look at this. This is now the next most important level we look at. And for that, we can drop to the daily. And on the daily, we even got some earlier signs. Simply, first of all, this was like higher time from supply, right? And we just saw those absorption wick at the tops. At the top could have been a nice short trigger. And also here, we have an internal low here. And if we mark this out, because this was also our range, right? On the daily, this was our range. And we broke it down with this candle close below. And this was a full body below, so I counted as a break of structure. And this was also an early sign. This was where I sold the first batch of my altcoin holdings, simply because this broke down. We bounced a little bit, made it like feel like a mistake, but once you have spent some time in the market, you will see that this happens over and over again. It breaks down. You think like, oh no, it was wrong to sell, and then the real move down starts. And the thing is, if you understand this, what I just explained with the breakdown, the bounce, making people bearish, making them bullish again, making them rebuy at the highs, the same thing happens externally around those major lows. And we have pretty much like three major options that could happen around those key level, around these key, or around every key level basically. First, we simply like slice through, right? So we just fall through this level, nothing really happens. Like could happen at any given time. So just because this is demand and a key level and we have this 2-day level here, does not mean it will give a reaction. The next option we have is that we take the level, sweep it into this liquidity area here. Here's the two-day, right? And we sweep it, make everybody bearish simply because we lose this low, and you will see a lot of like news and posts, oh, BTC is breaking structure, it's losing the low. And this will make a lot of people bearish. And the next logical assumption then is that we get a big bounce. Simply because people getting bearish, selling, people getting bullish, buying again at the worst possible time. This is how market makers create liquidity. And we want to see those things. Like key levels are not key levels because they magically like appear at the chart and price decides to bounce there. No, key levels are key levels because there is liquidity created. And liquidity is created not because there is a block, but because people are buying and selling. And so you want to understand how people perceive the chart, like the chartists, which have no real clue about liquidity, and the ones looking only at psychological numbers, only look at coin market cap and stuff like that. You need to understand that many people don't even look at a chart. But in this case, many will probably say the bull market is over because this is indeed the real invalidation. But what happens after such an event when everybody realizes, okay, the bull market is over, we have some kind of bounce. And we can look at this at the previous bull market as well. So option number 2. And the third option, which most people hate the most, is a front run. Why? Because many people are going to look at this key level and say, yeah, maybe if this gets swept, so many traders will say, yeah, this was going to be swept. And like the first thing I explained right now, we're going to get a bullish bounce. Maybe it just gets front run, right? So like the level got front run one time already. So I don't think it's the most likely outcome here. I think this is a little more likely, like sweeping it and then bouncing this time. But don't forget, everything can happen. And usually it just happened what it always happens, the thing that creates the most liquidity. And in this case, we will see what will create the most liquidity. As said, I rather expect something like this. Doesn't mean like from now directly a drop down, but I think we're gonna sweep this low and then we bounce. But time will tell. Time will tell. So key level internal, external, early signs. I think we covered that. And as well, obviously, now it gets a little more nuanced. This is where people usually then get not in their head or in their mind because they look at timeframes they're not ready for because we have 1,000 swings within one big swing. You see, as so far the whole structure was kind of logical, I hope at least. But now if we look at the daily chart, we have so many different directions. We have going up, breaking structure to the upside, breaking it to the downside. Here we don't really break it, so was a sign of weakness actually here. But also within a range, people think, oh, it's going higher. Oh no, it's going lower. Oh, we take those internal highs. Oh yeah, we front run this, and this is where it gets really messy. Like on the lower the time frame, the more messy structure gets, and the more confusing it gets. So if you have like if you still struggle to understand everything I've like explained so far, don't drop down to too low time frames because it will just get worse. And you don't really need that. To make consistent money, you don't really need to understand the 5-minute chart or anything. If you understand higher time frame market structure and you can apply TA bias free on those time frames, it's the easiest part of the game. And you should figure out this part of the game, in my opinion, first, make those easy money plays like consistently. And if you then still have the urge to like trade lower time frames and stuff, it will still be there. It won't run away. And so make sure you have the context in mind. And the thing is, if you understand this higher time frame context, everything else you apply on lower time frames will also make more sense because you can align yourself with the most likely trend or most likely outcome. Because looking at this structure with the breakdown here, once you like realize this is a break of structure to the downside, it's wise to be on lower time frames within this move. It's wiser to be on the short side, right? Because structure has broken and you should treat those bounces as counter trend bounces. And then you should treat every opportunity, every bounce as opportunity to go short. And people usually get it the wrong way. So they are bearish all the way up. And once they realize structure is broken, like here, like, oh yeah, new all-time high, structure is broken, it starts shifting again. And then they try to long every little level on the way down. Same like they try to short every little level on the way up. And this could simply be avoided by looking at market structure, because here we started breaking the daily to the upside, so it was better to look for longs. There will not be the greatest entries, especially not in crypto, but there will be, and there will be higher probability setups than like trying to short all of this upgrind here. And same story here. Structure breaks to the downside. Instead of looking too long every little like bounce here, sometimes it can make sense if you know what you're doing, but it's wiser. Look at this. It's wiser to be on the short side, simply speaking. And also, I get the question quite a lot. Like Monitor said, we're gonna have a bullish Chinese New Year, and everybody expects now this huge bull run. But bullish Chinese New Year could also mean like a 40% bounce, right? And a 40% bounce is nice to trade as a swing trade. And look what happened. We had this major low here, and we wicked it, then we grinded around a little bit, and then we took it. Structure obviously broke to the downside here for everybody, because many people probably did not look at this up here and this break, but here it broke, and many would probably say, okay, BTC also below like 40K and all that. And then we had this huge rally, and you will see this on all charts, like throughout the bear market. This big structural low was taken, this was front run, and then we had a huge bull run for almost the whole crypto market. And look when it happened, late January to early April. This is pretty much like, as said, liquidity around market structure, taking this low, closing below, making everybody bearish, bouncing, making everybody bullish, and then really nuking into the lows. I think we are up for something similar. And the question is, how far do we go down? When is the low in? But I wouldn't be surprised if we see before Chinese New Year into January, we see like this low getting taken. Like, look at the structure, like compare it. We have this leg up, which is in this case this last leg up. We take this low somewhere into here, and then we have our counter trend bounce, maybe 40%, filling those FVGs or something like that. And to me, this all becomes so logical. I don't even need to look at like 10 timeframes or look for a thousand breaker blocks. I just look at those kilos, and I think about liquidity and where it's created. And I think many people should do this as well. And obviously, then you go through timeframes and you look for the most probable setups, and you look for breaker blocks, and you refine those key areas with more structure. So this gives us just a clear guidance where to enter, where price might reverse. But it's not the breaker block itself that's creating liquidity. It's the break of structure, it's psychological levels, it's buying and selling in the end. And whales more or less just agree on certain levels on by leaving like footprints on the chart. We can read their footprints, but in the end, it's liquidity moving price. Okay, convex bodies. Can we use dailies for even earlier confirmation? Only weekly. I think I answered that. You can, as said, if you're daily is definitely like very wise to look at. Um, Lower than daily, if we talk about higher time frame trading, doesn't make so much sense. You will see a lot of manipulation going on the 12-hour already. So if you, I don't know if you guys remember, within this range here, like it looked like, okay, we're going to break this down, we're going to close we close the 12-hour body below. But if you look at, for example, at the daily, look, I mean, look at this wick. This is the same candle. And so daily is usually very nice to define market structure. Um, and obviously it's not going to be very easy still, because here, for example, you look at best at this, because if you look at all this, technically speaking, it's this area. This is our low area. Look at all those reactions, but it fell off a cliff, right? But this was pretty much the confirmation. You could have get an early sign here, and then same story. We lose all of those lows, we lose all the structure, and then more or less out of nowhere. I mean, there was a CME gap, I think, and we simply bounced like 20%. And if you remember sentiment, everybody was bullish here, bullish, bullish, bullish. We did this. Everybody went bearish for 1 or 2 days. We bounced aggressive, everybody bullish again, and we nuked again. And this is how liquidity is formed around those structures. And with the daily close here, you could have got an early sign or latest here with this candle. And then, so I would highly recommend to also look at the daily. Also here, as said, no confirmation, but here in this area, we got the confirmation. And it's even better than waiting for this low, right? Because you get your sign way earlier. And managing risk more tightly and cutting earlier or taking profits earlier, whatever it is, makes always sense than later, because maybe you end up making less money, maybe you end up losing less money, but um from what I've observed from my experience, the more risk management, the better. So rather you manage your risk one time too often and one time too tight instead of one time too loose, and yeah, you get something like this in your face. um so yeah, use the daily. Daily's good. How key would you say that 72K level still, since we took it on the euro pair? How do different currency pairs been taking effect stuff? I don't have data on this, so just wondering. Mm, so it's pretty much you like you said, the euro level is taken, so the level gets a little less optimal than as if it would been taken. But at the same time, it's still there. And this whole idea right now for me, through because this low has formed here, makes this level or this zone below, so let's remove this again, the zone below this low becomes a high liquidity area. And what I do most of the time, and you guys have seen me doing that, I don't try to predict the price reversal on the cent before the price is there, or before yeah, price is there, but rather like looking at PA once we are there. Because if price is doing that and we just nuke below the 2-day level, no signs of reaction, no nothing, why would I enter? But if it's doing this and even changing character here already, maybe sweeping the low again or something like that, um, it gives me more or less confirmation already, or breaking the trend line, or seeing signs of absorption, or seeing highly bearish news. I don't need to predict the price now. I wait for price to go to my area of interest, which is basically, to be honest, this whole zone here. And I don't try to predict where price will reverse, but I also obviously don't simply enter a trade on a whatever 20% stop loss. I wait for PA to develop, and then I refine my entry, and then I define my entry once we are there. Everything else doesn't make a lot of sense to me because I can't see the future. And I don't think that, like, you can, maybe you can refine it on the chart as well, but as you said yourself, you have the euro chart, you have the GBP chart, you have so many different charts, then it looks different on the not perp chart and all those things. So in the end, you can search, you can search, and you will always find a reason why price reversed where it did. But can you really predict it beforehand with all those variables? So to me, it makes the most sense to simply wait for PA to hit the level and then to define my entry better. And this also maybe means I don't catch the absolute bottom. It maybe also means sometimes I get front run, or I don't get my entry trigger. But what is really lost by not getting an entry? I mean, obviously, yeah, I maybe make the profit, don't make the profit I thought I would. But at the same time, yeah, it's not really like bothering me at all, because there will be another trade around the corner very soon. And usually, as I said, I get my entry. It doesn't really matter. Maybe it sometimes is a bit higher. Sometimes I get the perfect entry. Sometimes I get even a very refined entry. But I don't stress out too much about perfection. I just want to get my entry with tight risk management. And I said, no need for me to predict this beforehand. I have my zone of interest. And once we go there, I have my different things I look at, which is then also different currency pairs. So if I get confluence maybe on the GBP pair, that's great. If then it's also news confluence, sentiment confluence, order flow confluence, PA is creating local higher highs on lower time frame. Prime example for that is right now in ETH. So only apply lower time frame stuff if you're ready. But I do, for example, simple trend line trick. Once we broke this, you see we retested it, perfect area for entry. Um, and then we grind it sideways. We created higher highs internally here already. So here we changed character with the trend line break. We made another higher high. We went sideways, and all throughout here, you still can enter in the level, right? You don't need to like know before how many times let people like put a limit order here with very tight stop loss. They get stopped out. Then they think like, oh, what should I do next? Should I re-enter? Should I not? I usually not even leave a limit order if I don't really like believe in the level. In this case, I did because I played it very wide and we had a lot of confluence for this level. And then I get confirmation, I add size, and then obviously the trade either like validates itself on the way up or not. But so much to entry triggers, and I will do the same thing on BTC. Once price is there, I drop to low time frames, I get my entry trigger, and that's it. Or I don't get it. So also a possibility, right? In the beginning, I felt like there's got to be a V-shape reversal if we hit the key level, but well, in most cases, it's not correct. But if you refine when it's inside the level, you can get even tighter invalidation, also correct. When I just LO half position and key levels, I can't play it tight, but if we are in the level, I get like lows to be an invalidation and getting high RR on those. Yes. So for example, I play my limit orders kind of wide, and I also still like the whole ETH trade here is still kind of wide. This is pretty much like I left my limit order, and I left the trade like that because I had to travel into the city, pick my fiance up, had a lot of things, real life stuff going on, and I don't if I don't have the time or the energy to like manage those tight trades, I simply leave it like that because this is pretty much me buying spot with low leverage, which means I have like I need less margin and I can remove the margin and I have more control. In the end, this is you could see this as a spot trade. If I have more time, if I'm around my computer and if I want to, like you said, I can refine it on lower time frame, get those very high R trades. And to be honest, you see many people sharing those very tight setups, and sometimes you get execution proof, but oftentimes you don't. And let's imagine you get execution proof. Even if you get it, has this person shown you how he is executing and what kind of things he looks at once price is in a level? Or have you just seen a chart before and a chart after, and then you think like, oh yeah, it was so easy. But as I said, oftentimes it's not. Like look around, look in the community. People are not completely stupid. They put their trades there, they get stopped out because they played it too tight. But another trader, maybe he has some kind of execution tactic you don't know about because many traders are not very vocal about everything they do. And they only share like a percentage thing of what they do publicly. And the rest they're holding back because it's their edge. And I mean, it's their good right, obviously. And I think a lot of magic happens with execution tactics. And many people simply think like what you said, you put a limit order at the key level, price needs to reshape from there. In this case, it kind of worked kind of well. So if you would have played it like tighter and just with a limit order. But what I like doing and what you also said already, half of the position, limit order, wide. Why? Because sometimes I'm out, sometimes I have no reception, sometimes I'm in bed, sometimes whatever. And I simply like the level because it's a higher time frame key level and I want to get filled and I want to be exposed because I don't want to wake up in the morning and be front run. So maybe I leave this limit order, I go to bed, I wake up, okay, I'm filled. So, and let's imagine I got filled here, price is back up here. I can still decide to cut, I can still decide to tighten, I can still decide to add. I have full flexibility, but I have no pressure of being like not in the trade, but the level like was hit and now we're outside of the level again or stuff like that. And at the same time playing it so wide, it's very unlikely. Let's let's say it's more unlikely that ETH is going to nuke through that level on in one day, like with a let's say 15% candle or something like that. I don't want to say it's impossible looking at those candles, right? But we are here still in premium and we are entering this demand key level 2K or 3K key area kind of thing. And so I was more confident, but still 50% of the size, waking up in the morning, being exposed, having the flexibility to add to tighten, in my view, yeah, best position I can be in. And then if I want to, like you said, I can then add a low time frame, I get confirmation, trendline break. Um, I can add here tight stop loss below the slow or even within the internal structure, but then it gets even more complicated, obviously. And then instead of a 10% stop loss, I can add to this position or tighten this position to a 4% stop loss, can play with more size, go to, instead of 50% size, go to 100% with tighter stop loss. Whatever it is, I have a lot of flexibility, but this also requires obviously like a certain amount of, yeah, a lower time frame chart reading skills and emotional discipline required to do that. But even if not, even if you do that on the 1 hour or higher, you see still this takes time. And even though this is a very aggressive reversal, kinda on higher time frame, I mean it's basically a V shape so far. It still takes a lot of time. I mean, it feels already like an eternity since I entered this trade. And yeah, so there's no need to rush anything. The last part. I should repeat the last part. Yeah, which last part? Like the level part? Can you be more specific, please? Because I kind of dropped a lot of words. Are very tighten and stuff. Yeah, okay, so back to that. So we have this key level, and I enter the trade 50% of size limit order. Then we break this trend line, and with this break, I say, okay, good. Trend is changing. This does not mean like we need to reverse from here, but before this trend is changing, it's like just going down. So why would I add here? So, and we get some kind of break and we retested it, and I can use the retest or even also the break like within this area to add to also to my wide stop loss, for example. So I go from 50% size of the position to 100%. And this means my trade is on full size. And if I feel confident and if I'm around my computer, or I don't mean confident in sense of I feel good this day. So I mean like if I see the right signs and if everything is aligning technical wise, this is what I mean by confident. I can then add a tight position. So for example, here I could add to my major big trade with the wide stop loss, I could add something like that. And then instead of a 10% stop loss, it's suddenly only a 4% stop loss. And this is what I mean by add. And this is adding on lower time frame. So you add up risk to the same idea. So if this idea has 1% and you add another percent here, you're at 2% risk. But obviously this is riskier simply because your stop loss is way closer to price. And so for example, I would simply add 0.5% risk or something here. And then I can TP this trade, for example, here at the first supply. I can TP it here, and then it ends up being a 3R trade with all TPs. And I don't need to touch this one. And this one I can try to ride for even higher targets, be my higher time frame position, and this one on higher leverage, more size for local targets. But this is way more execution than I intended to um, talk about today. You got it. That's how I'm doing it right now as well. If I get the chance to. Yeah, and this is exactly it. If you get the chance to. And this is the beauty of this kind of execution tactic because you have your big one anyway. There is no pressure. It's a big one, a big position, wide stop loss. And if it's just this, that's fine. I'm exposed. I don't have FOMO nor nothing. I'm exposed. And if I have the time and if I'm around the charts, I can then even add to the same idea and maximize my profits on the same idea basically. And it's a higher time frame idea. Still, I execute the lower time frame trade on the higher time frame idea, and this increases my probability a lot. And the beauty is I don't have to. It's not like I need this trade or anything because I have already one. And this takes a lot of pressure. And oftentimes with strategies like this, this helps a lot with the mental game because why would you have FOMO? Why would you try to force anything? Because you have your position already. And if you can make even more, if you can add, even better. Yeah, so I tried to figure out the most reasonable way to do it with still having a full-time job and think that's it. Yeah, I said I like this kind of strategy quite a lot. because taking random trades on lower time frame, your probabilities will reduce a lot than if you take it within like a higher time frame key idea. um Makes just a lot more sense. I mean, my win rate on higher time frame is, I don't know in crypto actually, but it's, I think it's like 60 or 70% by now. I think I should calculate it at some point. And then if you can, with this win rate, can add on lower time frame, obviously the win rate on like executing on higher time on lower time frame won't be that high, but it's way higher than taking random levels within random swings if you align yourself with the higher time frame context. Good, good. So way more execution tactic than we wanted to talk about. But this is because you ask, and this is the same thing I'm gonna do in the BTC level. This is like my always my approach. So once we go closer to the level, I will probably leave some kind of limit order in the middle of the level, 70K or a little bit higher or something, simply to get filled. And once like PA is developing within the level, and if it's a real higher time frame key reversal, usually it takes a few days before we really reverse, and there will be time to add and to adjust and all those things. And as said, yeah, I think for most and also for me, it doesn't make any sense to try to predict the price before it even develops, before it's even there. Um, but I think people like this kind of certainty, this kind of like super secret sauce that makes this possible. And maybe there is one, but I think a lot of traders using some kind of execution tactics that they are not completely public about. And as said, even if they're execution proof, you never see them really pulling the trigger. You only see the after chart and then it looks all perfect. Yeah, we will see. This is, I just say this is how I do it. And the people that use it that way usually also have some kind of good results. And so I keep on using that because I'm here to make money and not to prove a point. Okay, back to market structure. We have like those kilos, right? And around those kilos is liquidity, and will bounces will happen, liquidity will be set free. And the fun thing is, if you then apply the breaker block edge, for example, and supply and demand, you will see that demand and also those breaker blocks, they're usually placed around those key levels. And this is not a coincidence. This is they are placed there because of this low, or this low is placed there because of this level. Let's frame it like that, because the low was formed after, right? So same story here. If we lose this low, it's even 50K. So this level is a strong one in my view. We lose 50K, psychological level, we lose this low. Everybody is going to shit their pants. So to expect a bounce from here makes sense. I don't say this is going to happen from here, but it's simply a bounce. And we can go along on the bounce, and we can take local profits. And if it confirms itself to become a new higher uptrend, we are already exposed at the lows, and we can try to add to this position on the way up. But if it's not the absolute low, we can make it profitable, remove the risk, and then it's going further down. Looking at the sweet chart, yeah, perfect example. Perfect example. Just need to be aware that altcoins are a little more erratic. If you apply your TA, make sure you think about that. But in the end, you applied it kind of correct. So we have the trend line break. Um, we are still in the key level. I ignore the random levels above. And you can apply, this is pretty much, it's a very basic strategy. And as I said, this is not the holy grail. And I don't think there is a holy grail, to be honest. But without this break of the trend line, it's still grinding down. And you will avoid a lot of losses if you simply wait for this trend line to break. And there will always be one. The steeper it is, the more likely it breaks. Um, but if it's like here, you have this flat line and then it breaks. This is like the first confirmation where you can pull the trigger. But as said, no holy grail, no certainty, but it increases the probabilities that you not simply just get liquidated. And on altcoins, as usual, you take all other majors into account as well, obviously. Okay, seems like you want to talk more about execution tactics. But we have like 30 minutes left. So let's finish this market structure thing. Simply highs and lows, higher time frame stuff, putting things into context. And one of you is now yeah, if one of you want to do this on a chart I pick, mark out the market structure, telling everybody what he's thinking. Would be nice if there is a, what's the word, volunteer for that. Not all at once, please. Let's go. Nice, Andy. Gonna bring you up.
Yo, hello.
Hello. Can you please just say one word or something? I just want to see if the recording
Hello?
is. Yeah. Yeah, looks good.
I
Looks
can
good.
hear you. Can you hear me? Okay.
Okay. Thanks,
My mouse just turned off, so I need to use my touchpad. Might be a little slow at times.
No worries, no worries. Sparisho, you can do next time. If we have some kind of exercise, you can do next time. Now let's do it with Andy. But your English won't be a problem, I guess. I think we can make this work. Okay, Andy, let's pull up your chart.
Yeah, which one? Or should I take one?
Um, yeah, let's take one. Let me think.
Can you see my screen, by the way?
Yes,
Is it the correct one even? Is it TradingView?
it's TradingView.
Okay, good.
Yeah, you can, if you want to, we can simply use MicroStrategy. You also already pull it up. I mean, it's something else. It's a stock chart, but it has still highs and lows,
Yeah.
obviously.
Let me just hide all of this. And then should be fine. I actually, when you explained the stuff, I kind of zoomed out, and I and I just saw this. So we're on the monthly here, right? So I was like, okay, uh, that's a good meme coin here. So I'm actually not sure here how important this one here from 26 years ago would be. So at first sight, I would have done it like this, I guess you could say, just not taking this into account at first, just to look at this. So we do it here. So this swing high is being broken by these blocks. So I would put like a key swing low right here. Oh my god, let me do it like this. Is that even good? I think it is. Yeah, should be fine. So here there's another break to the upside. So I'd put the most prominent swing low to break right here. Uh, I have too many templates for a simple line, to be honest.
Looks like it.
So yeah. Yeah, I was like playing around with different colors and I just saved them all. I think I need to, you know, tidy up. So this the all-time high. I mean, look, I have one for all-time high, so that kind of came in handy here. Um, then here on the monthly chart, we obviously have like still 2 days to go, but I would imagine we probably close below here, so we would have like a break structure here. So here would be another key swing high this time. Key swing high. And I can put a break right here maybe. That's similar to yours. I think I copied that from you actually. So yeah, this would be like the most prominent pivots on the monthly, I would say.
Mhm.
So we go down, oh my, to the weekly. So we still have like the most prominent one that's being broken here. So there's that. Then maybe if we look at internal ones here on the weekly as well, one could maybe look at key pivots. So this is broken to the upside, so this might be one for early signs on the weekly here as well. This is being broken. This one is being broken. They are very tight together. This one is being broken here as well. I think I like this one because this is like a key swing low right before the Fed impulse. So there's that. Just like we have a similar one here. So from this whole range, the key swing low is similar to the monthly, but then another key swing low could be like from the break here would be an impulse low here as well. And then we already have like the all-time high here as well from this impulse. So this swing high here is being swing failure, but I mean this kind of looks like these were maybe as an early sign. This one is being broken to the downside, so this could be a key swing low. Now we're just in the uptrend, downtrend. I mean, maybe here's some bottom forming, or maybe not, because this is like the 2-week level in like this whole demand area, I guess you could say, which is very wide. But I think this was a 2-week breaker block, 8-day breaker block, and like a 3-day order block, something like that. So kind of like that level. And I'm in that play right now. That's also why I have this chart pulled up. So there's that, and then maybe if we go down to the daily, we zoom in here. So at a first glance, I would say it's very similar, but here we can already see some early, some other key low from this break here on the daily, which would be the daily impulse low, I guess, right before that takeoff, before that lift off. On the daily, that's actually very interesting here. Internally, we have like breaks to the downside here. So right here we have to break to the upside with like some candle closes above. So this would be like a swing low that's being broken here. So here we break the other one, which is being broken to the or not. Yeah, I mean we break it here. So this is like for me, this would be like early signs of okay, this kind of looks like a range forming, like no clear clear structure. So so yeah, there's that. So we're going like what I mean is like, okay, we're breaking to the downside. This looks really bearish. Okay, we go to the downside. Okay, this is bearish. Then we have like the first change of character. Okay, this could be something cool. But not really breaking above this like key high. So this would be like an early sign, yeah, for a range. Then I think these are the most prominent ones. I mean, one could probably take this one as well to gauge, like, yeah.
But what
It's
does
on a
it help
daily.
you?
We have like,
What's this low help you?
this doesn't really help me at all. I mean, it's very, it's like what, 1, 2, 3, yeah, 5 days. Whereas we have like all of this, and this is the impulse low. So I probably wouldn't even mark it out also from this range. This is looks like it's in premium. Not really that probably matters, but I mean, it's just that fat impulse. I mean, obviously there's many lows there from breaks, but there's, yes, that's just an impulse. Nothing really to watch here. Then here we have like the all-time high. We have like a hard steep rejection on that candle. That looks like, yeah. Okay, that's a 30% drop. And then, yeah, I mean, internally we could probably, okay, we see, okay, this is going to the downside. And if we are like, if I would turn on like the bar replay, I mean, I could, to be honest. Maybe that's kind of cool here. Okay, we already know where something is, but we're down here. Okay, so right now we would have like this low, this high. Okay, then we see, okay, this low is being broken. We might have like a tendency to be bearish with this low being broken. Right now, this would be like a swing high to look at. So, oh, hello. Do it like this. Do it here. Then this would be like the pivot low as of right now. Keep on going. Let a little structure form. Okay, so now this one is being broken. So to the downside, which would make this one a key swing high to look at if you're like on this daily chart. Sorry for that. Oh, we have some more. Okay. Now that we are here, we look at that. We have like this triple bottom maybe, which would be like an internal break here. Okay, maybe bullish, maybe not. But we didn't, on that downturn here, we didn't break this key low, which, I mean, will be broken here, but as of right now, it's not. Then we have like another, maybe this is the first change of character. Then we have like, maybe you could call that confirmation. Then we are here. Okay, we are breaking this to the upside. Maybe you could lean more towards the bullish side of things. and also here, which is then interesting. This is being broken, but something here as well. Doesn't look very convincing. We have like this small body, then a close below, then this close above, then another small body, then we just break down here as well. But I mean, technically that's a break of structure. This one is being broken. Then here we would have like a key swing low, which needs to be watched, I guess. So let's see how PA develops here. Okay, this key swing low is being broken. So maybe a first change of character again. Which would then lead us to this high as being like a key swing high. And then like it like this. We have this here, and internally breaks here. This wouldn't be
But
10 years.
now, before
This
you
would
mark
even
out
break.
every single little high and low, how
Yeah,
which highs and lows could you use as signal? It's a difficult chart to look at because it's like breaking in all kinds of directions all the time, faking out in all directions.
yeah,
It's behaving like a meme coin, like you said from the beginning. So it's a difficult chart from a structural perspective. This is also why I like focusing on majors more, simply because the structure is usually more telling. Um, but now look at everything you marked out and what is like really important information. So rule everything else out because we could mark out the highs and lows all day long. But what is like really providing you a clear signal with something like actionable, like something you would want to trade or
yeah.
where you would shift your bias?
I mean, so we turned bearish here. So something to maybe shift the bias would be breaking these highs. Or I mean, let's say we break this high. Maybe we can look at, okay, this is the next one to be being broken. These internal ones are just noise, one could say, I guess here. I can remove this one as well. So looking at key swings, is this one really key? Probably not. So this one looks very promising
Hmm.
as a key swing high. Um, this one looks okay-ish
Hmm.
because this is very pivotal, or like this kind of stands out a bit from the rest. And then as for swing lows in this range, let's say, it's just this low as of right now. If we leave the chart like this,
Hmm. It's good, very good.
these would
Especially
be,
the one you marked out where you said it looks promising, and it is also because it's a support and resistance flip level. So we broke structure on this
yeah,
internal
if
low.
we,
Also here,
yeah,
yes, it's important from here on, but also we broke structure here. We went down and we retested it from below. That makes it also a little
yeah,
more important. And also it gives you early sign. Another good trick on those kind of parabolic, volatile, almost vertical moving charts are trend lines. Because if you always wait for a close or for a break of structure, it's usually percentage wise then already 10-20% of like paying back gains or being too late. And if you apply trend line on those
mm,
vertical moves, like on the move into the all-time high and on the move like on before the latest double top, once the trend line breaks, it's usually a very, very clear signal that this chart wants to turn, and the break of horizontal structures then the confirmation. This is very good applicable on those kind of charts.
what's actually funny is, I guess you could say I'm a little nervous to be like on the spot right now. So all you just said, I usually take into account, but I just completely forgot about it.
No problem at
So
all.
when I actually when I first look at charts, for example, like this support resistance flip, that's so clear. So such key horizontals, I usually mark out like this and then put a thingy here, say key horizontal
Mm.
or stuff like that. But I just completely forgot about it, to be honest. But yeah,
Happens. And it was
but
a
yeah,
market
but
structure
yeah,
exercise. We were not talking about support and resistance. So I did not expect this now from you. But you said the important high, which you marked out, the tiny one. It's also important because of this level. So in the end, the answer was, or what you said was correct anyway. Um, but yeah.
but I mean, you could think out of the box. So even though it's just a market structure exercise. So, but yeah, um,
Yeah, and another very important thing, which you had very actionable signals on the monthly, you had very actionable signals on the weekly, but once we dropped to the daily, it became very messy, and became like there's a high, there's a low,
yes,
there's a high, there's
yeah,
a low, and like everything you said is totally fine. There were highs and lows, but the question is which one are really helpful and which one are really giving you a signal and which one is like you said yourself are just noise. We can simply remove them because they don't add value to our analysis.
yeah. I mean, like here, going back to the monthly, this is very clear for
Yeah,
me to look at, right?
yeah.
Obviously we have this one. I wouldn't have marked it out on the monthly, but um, I mean, you still could have. Like it's support here. Now it's resistance. So one could still do that, I guess. But
Mm.
yeah, it became real noisy on the 1 day chart. And one thing I forgot in the exercise right now, when like daily charts are noisy, what I then do is, I'm not sure how clean like this stock would be right now, but on like uh cryptos, I sometimes then go to the 3 day chart, which have like which sometimes it makes it a little clearer. Um, whereas the 1 day could become a little messy. Just like you said before, 12 hours is very manipulative and not very clear, or I mean it's probably very clear if you're like really good at reading that stuff. But yeah, sometimes I then just swap to the 2 day or 3 day chart,
Mhm.
which
Mhm.
sometimes helps a little bit to make it clearer to look at, yeah,
Yeah, that's
and
good.
see stuff.
That's good. And then the question is like also dropping to lower time frames, going down from the weekly even lower. The question is always, does it add value? And like also looking at this chart on the daily and everything that happened there, it doesn't really add value. And it simply adds more confusion, more layers of complexity that are not really necessary. But oftentimes we do that anyway, simply because we want to see more and this and that. And obviously we need to check. But now after this analysis, I'd say the daily doesn't add real value to this market structure analysis. So why would we do that in the end? Now we know,
Yeah,
obviously we need to check first and then we know, but it's important to know when something has no edge and when something is just completely noise. And look at those daily closes at the double top at the latest. Look at those daily closes. You could mean structure is broken, but if you look at the weekly, it's just a wick, if I remember correctly. At least it was on the monthly.
yeah.
It actually
That's
closed
the big.
above. Oh, I mean the key swing high, which you marked out, it actually also closed above.
Mm.
So yeah, it's just a very, very predatory chart. Looking at the whole thing. And obviously we don't need only to rely on market structure, we rely on context, we rely on the knowledge that MicroStrategies pretty much completely intervened with Bitcoin nowadays. So the only thing they really do is buying Bitcoin, right? So we can taking Bitcoin structure into account as well, looking at this chart. And then obviously there's a lot more to it. This was just a market structure exercise. And I think you did well. And it also like showing how dropping to low time frames adds so much noise, which is oftentimes not even necessary for, especially not for high time frame plays. So
Yeah, like so Yeah.
Yeah, please.
Sorry.
No, no, go on.
No, I'm just saying because like I was looking at that chart and I was just wondering, okay, is there like high time frame levels I could potentially play? Because last time when we talked about stocks and stuff, I kind of tried to analyze like more stock charts. Also that this company, I think you made an alert or something, or
Hmm.
um, or at PayPal I looked as well, and yeah, I just tried to see, okay, is there like high time frame levels I could play? So one thing was MicroStrategy. I wanted to look at, and yeah, like I saw this like I think where did I start? 2 month or was it 1 month? And I saw like this demand zone, and then I went a little lower. I saw the 2 week breaker block in it, and yeah, I was like looking at that. Yeah, it's not recent. Wait, let me leave. Okay, yeah. So now, uh, so I just looked at that and I was like, okay, these are high time frame plays. So I wanted to like just see, okay, is there maybe some high time frame play possible? And yeah, so that's how I kind of looked at it, and not even going down to um, the daily or even below the daily on this one
Hmm.
or on the others as well. I think Netflix was also like a 1 day level, then a 4 day, a 1 week breaker. I think 4 day breaker, and like some some demand zone,
Hmm.
and yeah, that's how I looked at those the last week basically, uh,
Yeah.
on such a high time frame basically. Yeah.
And also, we have the same story as on BTC. We break this key low, which you marked with the X uh, um,
Yeah.
line, and it also lost the $200 key level. And as said, how many investors will never look at such a chart? They will look at line charts. They will maybe look at the price, and the price says, "Oh my God, we lose 200K with $200." And this is making them sell. This is making them bearish. And the ones looking at the chart, they will say, damn, structure is breaking down. We have a higher time frame break of structure. And what usually happens right after is a bounce, because this is how liquidity works. We create liquidity on the sell side, then we bounce, we create liquidity on the buy side. And this is all around those structures, all around psychological key levels. That's why they are so important. And the 2 week, which you found here, is pretty much the refinement of the whole demand, and it's below the $200. So from a technical perspective, it's great. The only thing I don't really like right now about MicroStrategy is the kind of noise that happens real world. I don't know if you heard, but they talk about like JP Morgan criticized BTC, and now the whole community is like selling. So sell your or close your JP Morgan account and move all into BTC and MicroStrategy. More or less, this is what it sounds like to me.
Yeah.
And yeah, I don't really like that narrative for buying MicroStrategy. Besides that, it only adds risk to my crypto positions, more or less. But it's a valid level, definitely, and I'm curious to see what happens next, to be honest.
So, yeah, how I did it was like I took this swing, the fib here, looked at the 0.5, and this is like my my first target basically. And
Yeah.
reason there was because it also aligns with the 705 here. So this would be some very cautious level I want to TP on.
Mm.
And yeah, but
Mm.
yeah, we'll see. We'll see
Yeah.
if it even works. But I mean, I have my invalidation, and if I lose, I lose.
Yeah, exactly. We just take calculated risk and it works or it doesn't. So in the end, everything is valid. Makes
Yeah.
perfect sense. And you will always find 10 reasons why it works. You will always find 10 reasons why it doesn't work. In the end, we can't really know. Probabilities are that it works because we are in demand, because we are even at the refined demand here. And yeah, so it's definitely worth to take the risk. Thank you for working with me
Yeah. So
here.
yeah,
It's great.
it was a pleasure. even though I was nervous. Yeah.
Yeah. So this about market structure. As I said, a MicroStrategy is also a tough one. Would have probably been easier for you if we would have picked something else. Let me pull my chart real quick again. Where is? Oh my God, how does it look again? Go up here. Move, move, move. So many windows here, and this one here. So for example, on MicroStrategy, as said, what I would do here, if I would trade it, I would use a lot of trend lines. Why? Because it's such a trending asset. It moves so aggressive, and before like waiting for
You're
those
on
key
sharing,
lows,
right? Are you?
I think I am.
Or okay, maybe I'm just I just need to. Hmm.
What are the others? Like, guys, do you see my screen? Yeah.
I just leave quickly and then rejoin.
Okay. Thank you.
Then I see.
Okay, guys. So MicroStrategy, I have also those levels marked out, and asset, this is such a trending asset. I would use a lot of trend lines simply because even on the daily, we have seen it's very messy, but on with trend lines, it actually removes a lot of the noise. So if you use the trend line here, maybe pull it a little more precise. We technically broke structure here in the 2 day on the red candle here, and then we went a little higher, but it was definitely broken here. So stepping aside makes perfect sense. And in here again, once this line was broken, it was down only again. And same story here. This big spike, and I remember the spike and how crazy people went about MicroStrategy. Even on lower time frame, you can just pull this trend line, and even the 1 hour can look at that, how aggressively it breaks down. With those kind of plays, you need to be so careful. I also place stock plays like that, and they move. Some assets move exactly like that. They are very trending, high volatile assets, and in trending assets, like the name says, a trend line makes perfect sense. Why? Because you have a trend that is working. I mean, there are even traders, they long those trend lines, and I know a scalping strategy that exactly uses that, and you can make like use of those moves with a simple trend line and like going in those micro pullbacks. But also on a higher time frame, let's imagine you bought MicroStrategy down here, and you see it goes parabolic like that while BTC is going for all-time highs. And then you see the trend line break. You might not sell the Pico top, but you sell up here instead of selling down here. And this makes a huge difference. And it makes the whole chart, in my view, a little more less predatory. And this is a prime example how different strategies, in my view, need to be applied to different assets. So if you trade different markets, different assets, and even the same markets, you have like different behavior of certain assets. And like Andy said from the beginning, this looks like a meme coin chart. And it totally does. And it does because it's moving so parabolic. It's doing nothing for a very long time, and then it's moving parabolic. Then it's doing nothing again, then it's moving parabolic. And it also moves parabolic to the downside. This is what people usually don't want to hear, but it does the exact same thing. And if I would want to enter MicroStrategy here, I would at least wait for this like aggressive. It's hard to pull it here actually because it's not that clean. I would wait for this break. The problem often with those kind of manipulative assets is that once this breaks, it usually breaks like that, and then it just simply rips. So maybe it makes sense to put in the toe a little bit, and then once it breaks on confirmation, you can still add size. And as said, this kind of approach does me incredibly well with those volatile stocks. Also here, you want to go long on MicroStrategy, I would wait for this break here. Simple as that. And you can apply this pretty much to all trends. Here it has not worked as well. It undercut the low. So this was probably ugly, but still it went higher after. So if you buy spot because you believe in this or whatever, or it's in a big level, which was not the case here, I just want to make a point. You can wait for those trend line shifts. And as said, the more volatile an asset is, the better. And yeah, Andy, you was half limit order for me there, as usual, half size. Yeah, perfectly fine. So this is how, if I would want to play this, I would play it like that. Half size here, break of trend line, adding the rest of the size, maybe even tighten below the slow, and off we go. And as I said, there is enough confluence to do that, looking at BTC, looking at everything. But what I don't really like, as I said, if you look up, if you go on X and you look about MicroStrategy, news about MicroStrategy, they completely shitpost you with this JP Morgan kind of crap and the MicroStrategy here and there and blah blah blah. I mean, the crypto news sentiment is bullish since 2024, so I don't know how much this is worth right now. Especially because psychological level lost, all of that big demand. So this might work incredibly well, and you might get rewarded kind of aggressive here. Time will tell. Time will tell. And yeah, we can do the same exercise again next time with somebody else if somebody has interest in that. Maybe with something else because this is real aggressive meme coin stuff. Maybe with something moving a little less aggressive. But right now, if you look at stocks, they all move kind of very aggressive. But we can also do this with Tesla. Similar, also very aggressive in its movement, very trending asset, but also different. Tesla is actually a good example also for supply and demand and stuff. Also, if you have done the course, by the way, and you're in for like a longer time already, check out the PDFs. The PDFs are completely renewed and stuff. I will also add some videos over the coming days, so the course gets updated. By the way, yeah. So time is over. Have you guys any more questions? Important questions, market structure questions, or anything you guys want to talk about next week or on Saturday, actually? I think such exercises help a lot for me. Knowledge just became understanding again. Great aha moments. That's great to hear. And as said, there is a reason why I want to do that because I see great successes with my mentees doing this. And to be honest, for me, the last 3 weeks were an eye opener because I started doing those exercises. And usually, people think like they understand market structure. And so I think they understand it, but you are actually, right away, your understanding is kind of well. But then talking to people and letting them show me their idea of market structure, it's sometimes not what I expected. And I think the big key, if there is a holy grail to anything, market structure comes close because with market structure is more or less the the base layer and you apply everything else on top of the market structure, whether it is breaker blocks, order blocks, all that, everything needs to be put into context of market structure, and so does liquidity. And so all goes hand in hand, and the one layer that connects it all is, in my view, market structure. And so I think we should focus on this a bit more. I mean, if it starts to annoy you and if you say, hey, it's definitely not useful or whatever, we gonna change it. But as said, for now, with everybody I do those kind of things, people usually say, wow, it's kind of eye-opening about market structure stuff. I have some stock charts I want to share, but can't do so in the discussion channel. Yeah, we can also talk about this next week. I gonna wanna spend some time with my fiance now, and I also get kind of tired of after talking 1.5 hours or 1 hour. You did some work for me now today as well, Andy, so I appreciate that. I have a question regarding PDFs. They differ from the course PDFs. I mean, where the course itself with the task. Nice session. Everybody was as well very useful. Yes, I had a problem with WOP. WOP is unfortunately horrible programmed, and I updated the PDFs after Albert left. I updated the PDFs, and I saved them, but it didn't really save it on WOP, so I had to delete the whole lesson and then upload it again as a new lesson now. And so now you have like the quiz course kind of thingy with the new PDFs and also the ones downloadable. Um, so they differed, but now they should be all the same. If there is still something, please tell me. But now I think everything should be all right. Um, because as I said, I had to delete the whole lesson. I didn't know that. And yeah, started grasping many things about market structure. That's great. And learning is repetition. Because I have some issues with the candles, not gonna lie, crypto's way cleaner in that regard. Yeah, the gaps, they look ugly. But what yeah, one thing you can all do at home, at home, you're probably at home. You can apply a line chart. If you sometimes confused with market structure and closes and candlesticks and gaps and whatever, make the chart a line chart. And I mean, then look at the structure. It's kind of clean, right? You see all the lows, you see all the highs. There is pretty much uh no noise anymore. And then once you have the structure, once you have the highs to lows and all that, you can then refine it on like breaker blocks, FUGs, stuff like that. The line chart can be quite helpful for that. I'm out of that WOP group, just saw on the website. I'm gonna send you a link, give you access again. Can we talk about how to make PA understanding better and if we should scalp on paper trading? Uh, yeah, I mean, I don't know what you mean, but by PA, I mean market structure is basically PA. So I'm not quite sure how to answer this question. And I mean, if you should scalp on paper trading, if you have the time and if you have the nerves and if it doesn't affect your other trading, why not? I mean, the more trades you take, the more experience you collect, and with scalping, will be able to do that in a very, very short period of time because you can take 10, 20, 50 trades a day if you wish. And obviously, this will 10, 20, 50x your knowledge or um, your learning curve simply because you do more. But obviously, if it starts stressing you out, and understand that you need to be able to do the right things because if you do the wrong things, you will 10, 20, 50x your process of implementing and learning the wrong things and making them permanent. Because practice doesn't make perfect, practice makes permanent. So if you keep on doing the wrong things, the wrong behavior, emotional trading, whatever, because you're not ready for low time frame, you will just make it permanent. And then you will later on have to work those things out. And this is annoying. So don't like make things permanent now, keep on doing the right thing or make the right things permanent now. This is what I want to say. So if you scalp, make sure you really follow the plan, you really have a plan and really follow your structure and collect the right experience. Don't just do anything to do anything, but rather do the right thing from the beginning and you will have it a lot easier in the future. Yeah, watch the recording from last week. Tobani showed something to scalp. And also, this is like also what we talked about today. Like you can scalp those higher time frame levels. Oh, crypto's pumping actually. You can talk those scalp. You see, now I get unconcentrated. This is like after such a long time of talking, I can't take it anymore at some point. But you can scalp within those levels. So if you want to understand market structure better, you can paper trade within those levels because you increase your probability of being right instead of like taking random scalps within some kind of structure. Take it within a higher time frame level once it hits, because then you can follow a clear plan. You want to go long within this level. You don't want to go long, short, long, short, long, short, long, short. You want to go long in this level, and then you learn to read PA to make this happen with a tighter stop loss within the level. Practice makes permanent. I connect that with Tom Hogard a lot. To be honest, I don't know this guy. I only know that Hoodstock posted or said that to me, and since then it's in my head. From Best Loser Wins. I actually never read that book. I heard good things. Probably has it also from there. I don't know. Um, so I connected always with him, but might be his sentence. I don't know. He's my middleware, exactly. He brings the good stuff. Okay, guys, I think we wrap it up. Thanks for working with me today. It was a lot of fun. And we talk on Saturday. I think, yeah, we decided for Saturday afternoon, or it's my afternoon. So we decided for the one this time of day on Saturday. And other than that, I wish everybody a very great week and stay safe. Have fun trading. And bye bye.